How's it going, everyone? Welcome to the 120 to 125 weekly trade log or weekly trade review. I took 21 trades this week. 2 of them were swings that I closed. I took 1 earnings time spread. I did 2 strangles, 1 butterfly, 13 day trades, and 2 lottos. So let's get into a quick market backdrop for this week. So we had a shortened week because of the Martin Luther King Jr. Day holiday. And we had a pretty big decision point coming up on the market. So I'm going to remove some of these indicators here just so we can see the drawings. And the one thing I'm going to draw is this downward sloping channel right here that had been breached to the downside. So when the market closed last week on Friday, we had a poke above it, but we were still above this prior relative higher. And I wanted to see this get smacked down on a nice long red candle. This is really what I wanted to see the next day. I'm okay with the small gap up, but I wanted to see a nice long red candle. We got the gap up, but then we got a poke. This was a weak move lower. The market started making a new high of the day. And that's actually when I decided to close my short swings. And I had a mix of day trading, both the long side and the short side, but I wasn't ready to take any swing trades because the market was getting pretty close to that all-time high, and we were pretty far from this support. This move up was very gappy. A lot of times it felt like it could have fallen through, but it held. So really had to be pretty short-term. Day trades, maybe some overnight swings. I think you could have maybe gone long here on the notion that we could challenge the all-time high and then probably take some gains near this day. Now, at the end of the week, market made a marginal new all-time high. And we had another little poke up higher, so an official all-time high of 610.78, but you would have to be cautious here. This move does not have a ton of volume, and it has been pretty gappy and pretty choppy intraday. So that was the conditions that we were working with. Let's take a look at maybe an M30 or an M15 chart. And I want to scroll back over here. So this is really what we were working with this week. And I'm going to go back to an M5 chart. I think that's going to show a little bit more of the detail. So bear with me here as I scroll back. And apologies for getting this video out a little bit later, a week later actually. I was at my friend's house and I just did not have my normal setup with my mic, and I didn't want to do a lower quality video, especially with one screen rather than having 2 screens. All right, it's quite a bit of a move here. Okay, so we are going to start with some of our swing trades. And I'm going to pull up the first one over here, which was CAT. And I want to have this SPY M5 chart up over here because the intraday timing on this was important for the context of this trade. So when I took SPY over here, this was a setup we had. Let me just clear. Well, you can see some of the important lines here, but let me just clear some of these drawings. The main thing that I want to impress is that we had a nice strong move lower, bit of a triple top over here, double top lower high. Again, some nice selling action, compressed for quite a while, and then we broke through that compression to the downside. So I really like that move on CAT. Now, this happened on a day where the market on the prior day was not super strong. And this, I believe, was on the 10th? Yes, that was a week ago. That was earlier on the 10th. And I'm actually going to pull up the trading view chart because I think that I can have both of these views up without scrolling too much in either direction. Okay, so I want to go back to the 10th. And just look at the intraday action over here. So this was the intraday action on the 10th, and then on the 11th, we got this gap down, and then this kind of steady grind higher for most of the day that ended up being a nice bullish green candle here on decent volume. So Cat was on high alert, super high alert, because my stop was this high at around 372, and it tested that high on the 14th. So it was reacting pretty strongly to the market, gaining some relative strength. Now it gapped up above my stop on the 15th. And on the 15th, I was like, all right, well, we had a gap up. We started to fill in some of the gap, especially if we look at the 15th over here. The market was actually rallying higher. It wasn't a super strong move, but it held the gap and started to rally higher. Cat had a gap up and started to sell off, getting through that 100-day SMA. So at this junction here, I'm thinking, okay, well, Cat, not looking great, but maybe I can take a better loss over here. I still think the market is going to maintain that bearish channel on the D1. This bearish channel on the D1. All right. So it's rallying up higher. And then on the 16th, I made a crucial decision. Normally, I would close this for a loss. At 380, through my stop, take the L. I'm in a 1/2 size, so wasn't a massive loss on this stock. The other part is, okay, well, if I'm still bearish on the market, maybe I can take a better loss if I get the market right. Cat still has a lot of selling pressure over here, and I think sellers should return, and they should give me something to work with. So that's what I'm leaning on here on Cat, and I made an expected value play. I said, okay, what's the probability that this continues up? What's the probability that this continues down? And it helped me gauge what I should do with the trade. So ended up settling something like, okay, well, even if Cat moves up to 398 or something like that, that would still be a full-sized loss. There'll be a normal loss on a full-size position, and I can probably eat that up. Now, I give that a 25% chance of happening because I think the market's going to roll over, and I think that these will provide some support. And I think I can get a better loss, maybe closer to the 200-day SMA. I'm not sure if it'll get back down over here to 340, but who knows? So that was my bet. 25% chance we go up and I take a really big loss, 75% chance to take a really small loss. So I figured that's what I should do. Now, this is where we closed last week, another decision point. And when we opened, we had a big gap up. And now I'm going to go into the M5 chart over here. And I got to scroll back a little bit on these because I am a few days ahead. All right. So, market, gap up. I'm watching for a gap reversal. First candle good, second candle third candle not good. All right, fourth candle looking good. Fifth candle not so much. We're seeing some choppy price action very, very early. Not a lot of pace or direction. Don't like it. So, market starting to drop. I'm like, all right, well, this is decent. Let's see if this actually does something here. Nope. Nope. Okay. So that's what happens over here. Now, when Cat makes a new high of the day at 1040, market over here starting to get above VWAP. That is when I closed the trade. Sorry if there was a pause there. I had to free up some space for my recording. So close the trade at 394.60 at this high of the day, and I made a really nice decision. Now, in hindsight, what happened with Cat? I got the market wrong, right? I made a bet, got it wrong. The interesting thing is, you see this little poke here that had a big, long red candle that ate out a tail of those gains? I'm going to put these drawings back up over here. We did have a downward sloping trend line. We had a bearish trend line just somewhere around here. It hit that trend line and smacked down really hard. So that's why your TA is important on the D1, because if you miss a level, you can get these really big candles that sort of go against something you're looking at the intraday chart because you're not taking into account the daily context. Yes, it ended up breaking through, but on a day trading level, you might have been screwed. So happy with that exit on Cat. You can see that it did end up poking down a little bit lower, and I would have to hold it before earnings for it to get back to my spot over here, but there's no way I was able to hold below earnings. That would just have been too much. So that was a loss I took in Cat. The next trade I took was actually on SPY, and I took a short somewhere over here at 591, and this was a half share short, and then I closed it towards the end of the day when SPY was closing near the high of the day. So I closed it at around 602.70, and same reason, I was watching to see if this broke over here, and I was using this prior high as a stop for that candle. So that's what I did on SPY. And then intraday, I was willing to give it a chance for the market to maybe roll over here. But I think the better improvement I could have made was to take gains at around 600. When I took the L on Cat, that's when I should have taken the L on SPY. Okay, so those are the two losses I took on those swings that I closed out. Let's take a look at some non-directional plays that I took. So first one over here was JD. And I was eyeing JD earlier because it had this big pop. And I knew that, all right, it's going to move one way because if you see these big pops here, these Chinese stocks end up moving one way or the other, and I wasn't really sure which way it was going to move. So I took it at 38.50, and I took the 37.50, 39.50 strangle for 75 cents. The market was less relevant here, so just playing the volatility on this Chinese stock pop. And I was looking to say, all right, well, what gains can I take on this position this week? If I could take like 50%, that'd be great. 100% would be really pushing it, but when these stocks really pop up, who knows? They can really make big moves, especially with news on China. So that's what I was watching for. Next couple of days, you can see that tiny body compressed candles, volatility kind of died down, and then we got a pop up on the next day. So on the pop up that we got on that Friday, which was the 27th, and let me just scroll back over here. Yep, so we got this pop up here. We are hitting this level, which was near the high of this long open candle, the open of this very long red candle here on the 21st. So we got this pop up, and I was like, you know what? I don't know if this is going to retrace some of these gains. It's been pretty choppy. Don't know if it's going to continue through. So I took a 20% loss on the strangle on this pop up over here. I got out at 60 cents. So I was pretty fine with that decision. Looks like if I ended up holding it longer, I would have been correct. But I didn't think we were going to get this move, and especially if I was looking for a gap reversal on the 24th as we're approaching the all-time high in the market, then I would have for sure been saying, okay, well, if I get a gap reversal, this strangle is dead in the water. I felt the odds of that were higher, and that is why I ended up taking the small loss over here. So with a strangles play, I don't do really too many of them, just trying them out occasionally. This is some small size, so not super bummed on this. I think he made a lot of good decisions, but I just didn't maybe give it enough time. And you could maybe leg in, leg out on some of these. I'm not comfortable with doing that, so I just take them straight and I exit straight. Not too much here on JD. Hindsight's 2020 over here. If we got the gap reversal, this was dead. If we broke up, then I would have gotten some nice gains. I think I would have gotten like a 35% gain. I could have gotten out for like $1-ish, $1.05 as the move went on later in the day. So I felt the risk reward was maybe not as much in my favor. The other trade I took was an mRNA strangle. So I think Hari took this, and I believe Dan also took this. So I was copying them a little bit. I followed them into the trade, but I had my own plan, which if you're to follow someone into the trade, you should have your own plan. I think it's totally fine to see a similar setup and look what they look for and structure it accordingly. So I knew what they were looking for, and I felt that, okay, well, here's how I want to structure it. Here's what I'm expecting. I really had my own game plan, and they just put it on my radar. So I took the 41.40 strangle near the high of the day. So you can see that closed right around 42.40, so about $1.50 move either way. And I thought, all right, either it's going to get smacked down hard to this 50 SMA and maybe the VWAP, or it's going to get pushed up very strongly. And I'm going to pull up the D1 chart here on mRNA because it'll show it a little bit better. Oh boy, that is a bit of a mess here. Let me just close some of this stuff here. I don't know why it's so far out. So I thought, all right, well, I knew there was this downward sloping trend line on mRNA, and you can see that I've drawn quite a bit of stuff here. The main thing that I want to call out here is that we have a couple of AVWAPs from prior levels. So this is from an earnings candle. This is a gap down here. Another AVWAP from this gap down. This red candle is the AVWAP from I believe a relative high at 139. So I knew these downward sloping AVWAPs would probably come into play if I'm playing a bit of a reversal play. There's also this downward sloping trend line from this point that would also come into play. So we had a ceiling on this trade at about $47. So I was willing to let it pop up to that level, and it felt like with this momentum that the stock had, it totally could. So open, we get a super long green candle. I love this green candle. My strangle is up 100% at this point. Then we get a bit of a tail. I'm like, all right, it's good. It holds, right? I'm watching for a gap reversal, but this is a really nice momentum. I'm also wary to see, okay, is this going to be just like I'm blanking out, a buying climax? Is this a buying climax on this move? Maybe. Not sure. I want to see half this holds. We get this medium-sized red candle. I'm like, all right, not the best, not the worst. We're still holding this halfway point. Now we start to chew at the halfway point. Not a fan. I'm like, all right, well, I think we still have a chance to test this high. As long as this low of this candle opens, I'm going to stay in the trade. Low of the candle is breached. Okay, I am out of the trade. So I actually ended up taking a loss on this trade, a 25-cent loss. I got in at 65 cents. So maybe like a 40% loss, something like that on the position when I was up 100%. Now, this is a pretty big swing, but I liked my thought process on how I held the trade because I felt like the strangle had some more upside to my target. And I was willing to let it to go about another $1, and that would have been maybe 150% gain, maybe even more on that position. So that was an mRNA. I think it was a decent play, but it was interesting because I should have held JD longer and I should have held mRNA shorter. And it just goes to show you that the decisions that you have to make are tough when the time frame is condensed. All right. Now I took a TXN time spread. I took the 200 calls for 95 cents. Let me just find the right day for this time spread. And this was on the 24th. All right. So here was this setup on TXN. Here's the daily chart on the bottom. And the setup on this was that it exceeded earnings 6.67% of the time, which is very low. IV difference of 0.67. Excellent earnings time spread setup. So I took the 200 calls for 95 cents, and I'm just going to scroll back over here to that day. All right. So I got it somewhere over here in the middle of the day, and it actually ended up falling to somewhere like 65 cents. So, which is interesting because it didn't move that much. So I was actually a bit surprised that it ended up falling as much. I didn't know if any news came out, if there was a little bit of crush that was priced in or something. But when I exited the day, I entered the spread for below the bid, and I got the fill slightly below the mid. So I thought I had a good fill, but sometimes it does that. Now, we had a big drop on the open. It exceeded that range that was mentioned in the earnings time spread setup, but we had this big tail. And I said, all right, well, this big tail, this tells us that it's by some support. I'm going to watch what it does here. We got another little big tail over here on TXN. And that's actually, I think, where I exited this candle pretty much right at the open. I thought I exited later, but I exited right at the open because we didn't snap back in very well. And I figured I'd just take the loss right away. So I got out at 30 cents, which was maybe call it about a 70%, 65% loss, something like that. Exceeded the target. You could wait for it to ride back. Maybe you could take a better loss over here. Maybe that could have been a 50% loss, but the spread is pretty much dead. I think Dave also took it, and he ended up shorting it, and he made the money back on the spread. So that's how he managed the position. So I don't think there's too much I could have done there. If I look at where I exited on the close of this candle, not a bad exit considering what the stock ended up doing later today. So I had maybe a few candles where it was better, maybe like 25, 30 minutes where it was better. Most of the time, it was done in the water. The last one I took here was a SPY butterfly, and I took this SPY butterfly at the 21st. So this is the last non-directional trade I took, and I took it here because we had these mixed choppy candles, low volume. I figured that if we break above to the upside, we'll probably test VWAP, so I took it for a 13-cent debit, and I was targeting maybe 100%. Now, these flies are interesting because if you take a 0 DTE fly, it pretty much only accelerates in the last hour of the day. So if you get a strong move to VWAP later in the day, that's when you want to take your gains. But you want to set it up early in the day, and ideally when you're farther away from the target, because then you're making a play that is going to return back to that level. So what happened was, bullish trend day, I got the market wrong and took the full loss on that fly. Very, very tiny position, so I'm not really worried about that. Just kind of a small experiment. There's not too much commentary to say on that. Occasionally I try some of these experiments. This time it didn't work out. So with all those out of the way, let's look at the day trades that we took this week, and we're going to go in order. So starting with Reddit, we took this on the 21st, and I am going to use this as the D1 setup, so I don't have to do as much scrolling back and forth. Well, I guess actually I'm going to scroll back and forth anyways, so I might as well just put it up on this one option chart. So here's it on the 21st. A nice little pop, nice little day of buying over here. Fairly flat open. Here's the market on the 21st. So weak bullish day in the market. Reddit's looking nice, and we want to get a nice little entry on this guy. We're aware of this high plus trend line that may be coming in the way and providing a little bit of resistance. So here is Reddit for the day. It is making big move up higher, choppy move lower, big move up higher. So I was waiting for this pullback, and I entered right over here at 187. So it was a choppy price action, so I waited for a dip, and it was a little end of day move here on SPY. SPY was gaining that finds some support, was grinding up higher. I thought, all right, we might get a little bit of a pop. So I saw this move here. We got a couple of candles, moved up over higher, and I scratched out of the trade for a pretty tiny gain. Scratched out for a 50-cent gain, and I was targeting maybe $1. It actually ended up hitting that $1 in the next candle, but I was looking for some immediate follow through. I didn't quite get it, so got out of the trade. That's pretty much it. So scratched on that trade. Not a terrible play, but just ended up working out, and I had my expectations, I had my time stop, scratched out, and not really going to think about that one twice. So that was I believe the only trade I took on the 21st that we covered. So let's go to the 22nd now. Market had a gap up, go, and then compress. So tough one to trade. What I ended up taking was one trade on ARM. So let's load up this guy. Oh, yeah. Massive pop up higher on some news. So we were trading this action. And look, there could have been, we're approaching some of these levels, so could maybe stall out over here. But ARM was a huge mover, and we wanted to get a piece of that action. So go into the M5 chart. Okay, so if you look at ARM, stacked green long candles, vertical move up. So you do not want to chase this move on the open. Super vertical move. It's going to pull back to that 8 EMA, or the 8 EMA is going to catch up. So we test the bid. We're holding all of these gains, and I enter ARM at, let me see here, at, the close of this candle, which is what I thought, 1045 at 182. So I thought this was a pretty decent looking entry. One thing to keep in mind is that this is a nice compression, but it's also, again, a wide compression. So something I noticed, I'd rather get a tight compression than a wide compression because those breakouts are not as reliable. Market at this time. So I entered here at 1040. Market at 1040. Market pulled back and then moved up higher. What did this stock do? We got a little bit of a move up, and then we started to sell off. And I'm thinking, okay, well, I'm leading on this pivot low. I'm also leading on VWAP. So let's see what comes in this trade. So pulling back to VWAP, I saw this is fine. This trade could be dead in the water, but it might have another chance to test the high of the day. So I'm waiting for it to pull back, and I'm thinking, okay, maybe I have a chance to add to this trade when it starts to show some relative strength. So it's holding VWAP over here. We get a little bit of a poke, and then we actually start to climb back in higher. And I'm glad I didn't panic on this poke because you can see it hit that pivot low, tested it, and then moved back up a little bit higher. And I added one share at 179.90. So I added it right over here because I like this move up. This is some orderly price action, gaining relative strength. If you look at what the market did from 1245 to 105. Yep, 1245 to 105, right? It's moving a little bit lower. There's a weak move down. We're probably going to get a bit of a bounce somewhere later. Doesn't quite happen. Move starts to fail. SPY started to move lower, and ARM could not reach the high of the day very quickly. So I ended up taking the loss here at the 205 candle. Yep. So I took the loss of the 205 candle at 178.13. So somewhere over here. So got long here, added here, and took a loss over here. So didn't end up manifesting. That's okay. I think my pick was good. My SPY entry was pretty decent, although if I look at this, we had a bearish cycle coming into play. So it would have been better for me to actually wait for a dip and then go long. I got in a little bit earlier, so I wasn't exactly synced in with the market. And I think if I was synced into the market, I would have actually not taken this trade, because by the time the market was setting up over here at the 1125 candle, this stock was actually kind of selling off, and it would have been relatively weak, and I would have just waited for the pullback and probably gotten a much better entry somewhere here. And if that didn't work out, I would have scratched out of the trade. So on ARM, I think it was a market cycling issue. Also, on this move over here, was mildly relatively weak, just for a brief moment. I'm looking to see what the market did here. Nothing crazy, but yeah, so a couple things on ARM. Really big move. I liked how I waited for this compression break. This compression was lower quality, and I wasn't synced with the market. So this was a market syncing issue over here. All right, let's move on to 123. So 123, I took quite a bit of trades on this day. I think I took 1, 2, 3, 4. Yeah, 4 trades. Took a lot of trades on the 24th as well. So a lot of trades later over here. Let's start with SPY. I took SPY on this 1030 candle, and I took it short at 605.92. We had this wimpy move up higher to test in the gap, and it filled. And I thought, all right, well, we have a chance to maybe test this downside and maybe fill in some of this gap over here. Again, I'm watching for that gap reversal over here, and this move has started to stall out a little bit. Now, we got some choppy price action. We didn't quite get the candle, so I scratched out of that trade at 606.09, and I scratched out of this trade at, about 15 minutes later. I need to see some immediate follow-through, and when I didn't get that, I scratched out of the trade, I believe, on this candle right over here. And ended up being the right move. Market ended up rallying, but I used kind of the time stop in my favor, where I wanted to see a certain move at a certain time. The volume was low, so if I didn't get it, it wasn't really going to go. I think that's another key I've noticed, that like when we get these long red candles and the volume is low, they really pretty much retrace right away. So you can always pretty much get a better price by waiting an extra candle or two and getting in at the halfway point, rather than pushing it and chasing at the low over here. Now, at the same time that I took this trade, I did take FSLR as a short. So I'm going to pull up this trade here. So this was FSLR on the 23rd. You can see how it actually ended up being a bullish hammer. All right. So this is FSLR. Now, a couple things I was weary of on this stock. First of all, it's a choppy stock. Second of all, it had a pretty nice sell-off yesterday. This could be a selling climax, so I was watching for that. Now, I took the trade short here at 66.90, and I got in at 10.05, so on the close of the 10 candle. So right here, 66.90, got in on the trade. Stalled out over here, and I didn't see the follow through I needed to in SPY. So when I closed SPY, I also closed FSLR. I also had to go to a doctor's appointment on this day. So I figured that I was initially thinking of setting a wide stop and letting it trickle through. But then I thought, you know what, let me just scratch out of the trade and not have to worry about it. Ended up being a right idea for the day trade. I avoided a big chunk of this move, and I avoided danger. I think this is a big part of day trading, avoiding the danger. when you are wrong. So again, I was watching for that SPY gap fill reversal, but I didn't get one. Wasn't really showing much relative weakness because SPY was compressing. I should have at least seen this stock tread lower while it was compressing, and I didn't quite see that. It started to stall out. So scratched out of that trade. And I scratched out of that trade at 167.22. Just writing this in my notes, actually. It was not updated here. Okay, next trade I took was ANF as a short. And I also took LDOS. So I took both of these at the same time. So let me walk through the setup on these ones. So SPY's moving up higher. We had a decent move down lower, and then we had a wimpy bounce. So here is when I was saying, okay, well, we've had a nice little run. We've had a marginal break through the high of the day, not really able to get above it. Let me see if there's some opportunity on the short side. So I'm going to pull up ANF here. And we're going to go back in time on these. So here's the D1 setup on ANF on the 23rd. It was a pretty weak stock. It was choppy. And I entered on a pullback. That's what I was watching. So let's go into this M5 chart over here. So this is what ANF did over here. SPY moved up higher, stock compressed. SPY moving up higher throughout the whole day. ANF staying nice and low. Nice steady selling, bullish selling. Sorry, a selling climax. I gotta stop saying bullish selling climax. A selling climax, super high volume candle at the low of the day. Held the gains, long, bullish, green candle over here. Okay, so stock is pulling back. It's probably going to roll over here. So watching this, I'm waiting for it to set up. And this 205 candle was the perfect stock entry, in my opinion. Rolled over, and it was getting through this low right over here. This breaking out of this compression to the downside. Still a little bit relatively strong, you can see here on the chart, but I wanted to see some better follow through on the stock. I felt like I had a chance to at least test the low of the day, and I had maybe $1.50 in this. So SPY at 205 was doing this. It was inching lower, and it actually had put in sorry, let me close this 2 o'clock candle. 210. My bad. And I put in this candle. So I think, all right, well, we might have a little bit of bounce. That's fine because I think this is such a good stock entry. It should withstand any bounce, and it might even leak lower if the bounce is wimpy. Bounce is looking kind of wimpy. Stock is leaking lower. Leaking lower a little bit, but this is a kind of, I mean, it held the gains while the stock moved lower, which was nice, but it wasn't a very strong move. Now, on this trade, I ended up holding it until the last 10 minutes of the day. So if I keep looking here. Yep, so right over here, last 10 minutes. Market going up higher, starting to sell off, and then that is when I took the gains at the 345 candle. We had this kind of bar over here. I thought, all right, well, this is some pretty nice gains. I knew that sellers could come in later in the day and just kind of keep knocking this down. We're right at the open of this long green candle as well. So took some decent gains at 122.49, so 50 cents of gains. Not too bad. This was kind of a weak leak lower, and I took gains when I had a new relative low on this guy. So that was a nice little win in ANF. I thought I had a good entry. I had a good plan, and I had a good pick, so it ended up working out. This is an interesting case, by the way, too, where I did get the market. I didn't completely sync up with the market cycle, but I predicted the next cycle correctly, which meant that I was rewarded for my entry in ANF. Now, LDOS was another short I took pretty much at the same time. I took it at 210, or the close of the 205 candle. And here is the setup on LDOS. Here's on the 23rd. Nice, super long red candle through that 200-day SMA. And erasing all of these gains from the prior day. See here, it is a bearish chart, but it has a big move, chops around, then it has a big move, pulls back over here, and then it's making its next big move. Chopping around here, so you don't want to wait for another pullback if you're swing trading this guy. Now I'm going to go to the M5 chart. Sure to stay hydrated too. All this talking can make you pretty thirsty. So I entered on this 205 candle. Here was the setup on LDOS. Strong move lower. Snap back to test that 200-day SMA. Test it, compressed, and made it tested this level twice, broke this level here, and then we got a clean break through this low level here. Now, a more ideal entry would have been, I think I actually put that in wrong. 150.90 would have been a slightly better entry. I got in at 150.50 or 150.53. So I got in, here's the low, got in right somewhere over here as it was making that level. Stock, again, held the gains while the market rallied up a little bit higher. One little pop, got faded. And then it had a nice little late day sell-off. And then when I got this nice long red candle near the end of the day, I took my gains on that stock. So I got rewarded for this little end of day move because I predicted that this move up was correct. It was going to be weak, and I was right. And because I was able to hold through that entry, I got a nice little pick in this stock. So I took gains on this guy at 148.67, which is right over here. So just shy of a $2 gain on this stock, which was a nice win in my book. So pretty happy with both of those wins in ANF and LDOS. Okay, 24th, whole bunch of trades on this day. We are going to start looking at the market over here. So, weak move up higher, long red candle. Not a lot of volume on this guy. Wait for some retracement. We get a weak move lower, but not super strong. We're also, by the way, very near the all-time high on the 24th. All right, so here's where we were. It was a test. We had to move up through that all-time high, poke through a test, fall back, then we ended up getting a double top lower high. So this was an interesting day here, and we're going to play through it quite a bit. So first, on this early candle here, I took NVO short at the close of the 950 candle. So I'm going to open up NVO on a D1 chart. All right. So this is NVO on the 24th, had a big gap up, and this is a gap fill reversal play. It's not something I typically post because it's not as textbook, but when you get this right, it's a very, very powerful play. I'll give an example that happened this week. TER was an example of this play this week. You can see here, massive gap down post earnings. Stock rally the entire day. So it tends to work a little better on the long side, but can also work on the short side. Now, NVO is a pretty gappy stock. Let's give it a second for this chart to load. You can see how it gaps a lot. So it has to be a pretty meaningful gap up, and that's what we got. This is a much more meaningful gap up than something like this. And I felt like we were going to test the downside. This is a bearish chart, so we had a chance to close and fill in a good chunk of this gap. So now I have to have the price action intraday confirm that thesis. So let me just get over here. All right. So this was NVO. We had 3 stacked reds. Green candle, move lower. Green candle, move lower. So this is a bit of a choppy move lower, but I got in on this candle right here at 955 when the market new low of the day over here. NVO selling off nicely. Then market had a pretty weak reaction. I also went short SPY over here at 10 as well. So I went short SPY at 609.72. So got it over here. Again, you could get a better entry at a retracement because this is a low volume candle, but we want to see if the volume starts to pick up. So chopping around, not doing too much. And then I end up exiting SPY at 1047. So in this candle. So I took about a 20-cent gain on this on SPY. Very tiny trade. Not too bothered about that. It was a choppy move lower. Maybe I had a better chance to exit on the low of the day. But I didn't want to kind of press my luck on this kind of trade. So I figured I'd take the small win, get out, and reevaluate on the sidelines. NVO from my entry was not really doing a whole lot. I wanted to see some better price action from SPY, some better price action from the market. And I took the exit on this trade on the 1120 candle over here. Tested VWAP, which was fine. And I had an order out to scratch the position. And I scratched this position on this candle and ended up being a pretty good scratch. I also noticed that we had this bottoming out process. Strong move here. Again, bearish channel, tall bounce, higher low, and then it just starts to compress and die out for the rest of the day as buyers and sellers are just fighting off what's going to happen on this guy. So I recognized the price action correctly, recognized the market price action correctly as well, and I knew that I had another chance to get out of the trade because I had a nice entry earlier in the day, and that's what I got. So that was NVO and SPY. I took a DKS Lotto, and I followed Dan on this. Took a DKS Lotto over here. Strong price action. Had some nice chance for a follow through on the 24th. So I took this early in the day. And I got in at the 1105 candle, which was, somewhere here. So near VWAP, I got this price. And it had some nice relative strength at this point at the 1105 candle. You can see how here's the market over here at 1105. I got the market right. Stock ended up compressing, not doing a whole lot. And then the market started to sell off. DKS started to sell off. I averaged down on this trade because I can't average down on lottos, and I didn't buy it at my full lotto size. So max at lotto, I'll put in like 30 cents, which is a 0.1% of my account. So I got in this for 20 cents. I took the 255 lottos for 20 cents over here. And then I averaged down at 5 cents and 4 cents around over here. So my average cost was 10 cents. And any sort of pop up over here, I was leading on some of this support. Any sort of pop up, I could get a really decent profit and way easier to scratch out of that position. Didn't end up happening. Took the full loss on DKS. So another L for my lottos. The other trade I took, or took a few other trades. The first one was Twillo. So this was Twillo on the 27th, compressed, and we were potentially starting to pop out of this range. So strong D1 chart on news and some decent price action as well. So here's Twillo on the 24th. Gap up, compress, 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 forming some higher lows. And then I took it on this breakout right over here. A small close above this high at 40.79. Or sorry, at 40.95. So pretty much at the high of the day here. I like this action here on rising volume. And I felt like we had a chance for a decent amount of follow through. Now, if you look at the market over here at 1120, it was also looking pretty nice in terms of the fact that we were bottoming out over here. We had a 1OP bearish cross, but I wasn't actually too concerned about that. I felt we had a good chance to test the upside over here. And I ended up getting the market right, but I got Twillo incorrect. And I think the key on Twillo would be to, well, it broke VWAP over here. So I took the loss at 137.38 and that 137.28 at the close of the 12:05 candle. So this is when I took the loss on Twillo. And stock pretty much died the rest of the day. Didn't do a whole lot. Maybe could have taken a better loss here. But looks like this stock, it just needed more time to digest. And it wasn't the cleanest break of the high. You can see that we barely poked above it, and then we engulfed it really fast, this shouldn't have happened. So a cleaner break that actually cleared that level is going to be much more convincing. So the mistake on Twillo was not the best confirming entry. You either should have gotten it over here, get into the pullback, or get an entry that really confirms above that level. Didn't have that. So that was Twillo, took the loss. The other trade I took was Abbott. And Abbott was an interesting one. So I took it, here is the 24th over here. And I'm going to pull up this chart on Abbott over here. But I had a couple of high plus trend lines that were coming in the way of the stock that I missed when I first took the trade. So I'm going to go back to that day. And this basically was a very, very fast scratch that normally is a VWAP bounce. So here's the stock early in the day. And this is a really nice move on strong volume. Pulls back to VWAP, right? So this is a nice entry point normally. And I took the trade at 128.81. So I took it right over here. And I scratched out of the trade exactly 2 minutes later. Let me make sure I just have the time right. Yeah, so I took the trade right here, scratched the trade 2 minutes later because I missed the fact that we're at this high plus trend line. I didn't know if we're going to clear it or not. And at 11:30, yeah, I figured, you know what? I missed the TA. It's not even a market thing. Let me get out of the stock. I can find better picks. I don't have to be stuck in this position and hope it can clear that. ended up being the right play as it sort of scratched out. Yeah, I had a chance to take a couple of tiny wins, but scratching out was the right move in this case. So scratched out of Abbott. And the next trade I did take was IBKR. This was a really nice win. Just going to pull this up here. So IBKR, you notice gap up, compress, and it broke out of that compression. So I've been noticing that when we get really nice range candles on a stock, it typically happens on some sort of D1 event. And that's something I'm going to be watching for a little bit more in my trades. Something I'm watching for, but that is something I was really looking at. So here's that setup over here. Here's it on the M30, right? Gap up, compress, break out of that compression with some nice volume. So I was joining that move. Okay, let's go back in time and see how this chart looked. So nice, powerful move early. We have a wide compression at the high of the day, but we held, and I enter at 11.25. So a couple of things that's going on right now. First, SPY's crossing VWAP. We have a bearish cycle, but I'm predicting the market's going to go up. The second thing on this thing is that I totally forgot my line of thought. Oh, here we go. So while the market's moving down, I'm judging this move. And when I'm judging this move, I'm doing two things. I'm evaluating my current shorts. And if the move is wimpy and I'm thinking it may bounce, I'm going to look for potential longs. So while I was short SPY and NVO, I was looking for charts that were holding up really, really well to SPY. Because if this move starts to rally up higher, I can enter these moves and get ahead of them before the market starts to go. So when you really get good on your day trades is when you're one step ahead of the stock, one step ahead of the market, and you know when to join at these favorable entry points. So I joined right over here at, find this right here, at 217.77. So join in right here, pretty nice entry point. Ideal 217.60, which was the close of this candle. So that's usually the mark that I like to have, but overall pretty good. Immediately follow through, got one little check over here, and stock started to rally higher. So market's rallying up higher, and then we get this long bearish candle at 11.55. What does this stock do at 11.55? Poke, rally up higher. Okay, good. We are in. This is a good mode. So now I'm watching to see, is this going to be a solo? Are we going to engulf this back up pretty quickly? Well, we're kind of chopping around here. We're holding the halfway point, and we're below VWAP. So market tries to rally up over here, gets smacked down, and it's sort of holding this level right now. So this is where I start to get a little bit more neutral, a little bit more bearish on the market. And if this long grid candle was quickly gobbled back up, then I would have been considering taking or adding to this position. But because I wasn't sure, I didn't want to add to this position. So I was riding it. And then I think, okay, well, on any sort of long pop here, I'm going to start taking gains because the market's not quite doing what I expect it to do. And I'm going to get to the sidelines. So I'm riding it. And then I get this pop here. My target is actually 220.50, something like that. But this is a nice pop at 220.18. So I figured I set my target a little bit higher. If I get a really long candle, I'll take some gains to that. And that's a really nice win. If I get a medium candle or any pop that starts to distance itself from the 8 EMA, I'm going to take some gains. Because you see, when we get these pops, they start to retrace, right? Pop, retrace, pop, retrace. Nice organized candles is fine. When we start to pop up, right? That's when I got out of the candle. So took gains at 220.16, which was a pretty nice win in the stock. And compress. Market then started to make a new low of the day at the 12.50 candle. So even if you got out at 12.50, still a decent win. And it actually resisted the market for a good chunk of time. So you had some time to get out of this trade, even if you didn't exit on that plan. And it had a very choppy move lower. So even if you miss all of that, I knew I had a chance to scratch out of this trade. And yeah, ended up holding the gains. And I actually would have been in profit the entire day. Never would have taken the loss because that's how strong the stock was. So really proud of that IBKR play. I felt like I I liked it, and not just because I won, but I felt like I had picked a good stock with a good setup. I entered well, timing it with the market cycle. I adjusted my market bias, and I was going to add, but didn't end up adding. And then I actually ended up picking a really nice exit, which may not always happen. Sometimes there's a little bit of extra meat on the move, but I had a game plan, and on a pop, I was going to take gains on a day when the market was starting to look a little bit more soft. Okay, so now SPY's looking bearish. What am I thinking over here? Well, it's bearish, and then we get this choppy move lower. And actually, this entire time, what I'm thinking is that this is probably going to resolve in a selling climax, right? We have some selling pressure. We're not able to get off the deck. You can see that the halfway point of this candle held. It's a little bit choppy. I'm not expecting a bounce, but we're near the all-time high. I'm expecting probably a long red candle and then a pop-up. That's what I'm watching for. So I take SPY short at the 150 candle at 608.11. So I take it right here, 608.11, and we get a nice long candle. And I believe I was targeting maybe the close or something, but I think I was targeting like 607, maybe 606.50, something like that. But at least $1 here. And then we had a nice long red candle on a tail. I thought, all right, here's my selling climax. I'm going to take some gains. And then I took my gains at 607.35. And we had a little bit of movement lower, but there wasn't that much meat in the bone left. Another 40 cents, but big chunk of the move. And then, yeah, it ended up kind of dying out later in the day. So that's how I traded that. Pretty happy with that trade. Again, it's a good feeling when you get the market right and you're able to read what the price action is doing. This wasn't a chasey candle as well, where we made a long red candle. Once the market makes a long red candle, it's often going to retrace. So you want to watch for what happens after that candle. And that's a lesson that I'm still quite learning myself. Last two trades here. TXN. So TXN, I was on this trade already because I had taken a time spread on this guy. So I'm going to go back in time here. And I took TXN short on this break of the low of the day at 1240. So here is TXN here. Here is the 1240 candle. And I like this because, look, double top, steady selling, lower. Now we have a little bit of retracement, but this is some nice action here. Break through the low of the day, nice long green candle. See how much it cleared this? Remember the Twillo trade that I took earlier and how little it cleared it? I like when it clears this level with a good amount of room. So it came back up, tested that level, didn't quite hold, and didn't quite move down that much. So we're moving lower, but market's moving lower. Stock isn't moving that much lower. And I exit this trade at 115. So I exit this trade, I believe right here. Where's the candle right here? So I exit this trade at 186.60. And I took a small loss on this, 60 cents on the stock. So pretty tiny loss, but maybe bigger than a scratch would normally be. And if I look at what the market did at 110, we had this candle right here, which was this bearish hammer. So I thought, all right, well, stock should have moved lower. Didn't really move lower. Market did move lower, put in this bearish candle. Probably going to get, or a bullish hammer, sorry. Probably going to get a bit of a bounce here. And I think we're going to break through my stop. So I'd rather just take the loss now rather than wait for it to break through my stop. Well, not the right mentality. Moved lower, and then this 140 candle was the tell. Or sorry, the long red candle, that's probably when I would have taken gains, when it did not drop with that long red candle at 155. Yeah, this was that drop. So that's when I probably should have taken gains on this trade. And that would have been a nice 60-cent move. Tiny win, but a decent win nonetheless. So really, I think the lesson here was to lean on my open until I was proven wrong. And be willing to give it some time to trade. Now, I got the market right. That's the important thing. I got the market right here. And that what allowed me to stay in that trade, even though it never confirmed above my stop. So it's another thing I think I have to maybe improve on here a little bit is, leaning on this high bar here and not panicking when it doesn't break through that level, because that's a pretty good indicator that we're going to inch a little bit lower. And I could still take a decent win or a small win on this. So this would have been this is a $1 swing, right? Instead of taking a 60-cent loss, could have potentially been a 60-cent win, or even a little bit more, maybe an 80-cent win. So that was TXN. I did take a lotto on this. I took the 185 put lotto at 144, which was right here at the low of the day. Ended up being a terrible place to take the lotto. Pull back over here, and then when I saw this low get engulfed, I added to my put lottos. So took it 35 cents here, added to my put lottos at 3 cents and 5 cents. My average was 14 cents at this point, and as long as it hit the low of the day, I could scratch out. Didn't really end up happening, and took the full loss on those TXN lottos. And I just didn't have the market on my side. Market was so choppy, and you can see how relatively strong TXN was. Just wasn't the right move for the lottos. So lottos is one thing I'm going to think about a lot in terms of what I want to do for February. But yeah, those are all my trades for this week. So once again, the weekly trade log will be in the description. Running in these notes. And I hope you guys find these helpful. They're definitely helpful for me to review my trades and notice a couple of patterns that I'm seeing in my own trades and course correct, so I can really hit my goal and try to get some profit and really start to treat this like a business. Thank you for watching, everyone, and I will see you all in the next video.